Good evening, welcome back to Investor Insights, and this is going to be a live video of the market's response to the jobs data in about 2.5 minutes. To just give you a rundown, the Aussie's been weak, the yen's been weak, everything's been weak across the board, currency wise against the US dollar. This is probably because they're expecting a good jobs number, and thus this likelihood of tapering being higher. Futures are about 3.5-4 points high on the S&P. I'm actually going to swing the camera around to my laptop. I'm away from home tonight, so we're gonna just use a basic laptop setup, and you're gonna see the immediate market reaction when the data point comes out in about 1.5 minutes. The ADP said it all. Private employment has been private hiring has been slightly stronger than consensus estimates. You're going to see what the total government number is going to be. Now I've got the Bloomberg TV going on, but I'm just going to put it into the background and you're going to hear the actual live release of the report, and you're going to see the market reaction. Okay, I'm going to turn on the sound as soon as this happens. And as soon as the data comes out, I'm going to put the screen in the background, the Bloomberg screen, and you're going to see the S&P chart right behind it.
Market than the headline number, as far as I'm concerned. When you have millions and millions of people, the number is somewhere between 28 and 37 million people who are working part-time, many of whom would
you can see the yen's down against the US dollar, Aussie dollar's down, the euro's down, the pound's down, oil is up, really up, and gold is down.
Right, and it's, as you mentioned, it's the quality of the jobs as well, and how much those wages are being paid.
There you go. See the numbers fluctuate wildly now.
Now, Peter Cook, our Washington correspondent, is down at the Labor Department. Peter?
162,000 jobs in the month of...
Actually, it's much smaller than consensus estimates.
Drops to 7.4%. That's the lowest rate we've seen since December of 2008. There are revisions in this report that take a little bit of the luster off it as well. Plenty for the Fed to digest in this report, but perhaps more questions than answers. Again, 162,000 jobs last month created. The revisions to the prior 2 months knock off another 26,000 jobs. The estimate for last month from our economists was 185,000. That's the lowest non-farm number we've seen since January of this year. The average for this year through the first 7 months.
The ADP doesn't actually tell you a good estimate as to the non-farm payrolls, because as you can see, the Aussie dollar has jumped about 70 basis points upon the release of the data. The euros jumped about 100. The pound's jumped about 70 or 80 odd. The yen has jumped almost 60 or 70 points. S&P futures are up. Gold has jumped, and oil is basically flat. So this is a strange number that's come out. We're going to have to digest it and see how the market's going to move after this data point. I'm just going to switch off the sound because it's getting a bit annoying now. We'll figure out what's going on, but whilst the market's going to digest it over the next half an hour or so, I'm just going to put the camera back where it was before and talk to you guys about it. So, where to now? Well, as I've always said, the jobs data is not as rosy as everybody makes it out to be. They were expecting the the consensus estimate was 200 plus, and they've come up with 163. And you heard it live from the commentator, it's the lowest jobs number since January this year. So this is either a case of the sequestration beginning to kick in, beginning to bite, because public sector hiring has been strong, but the government layoffs have made it quite painful, obviously, for people, because it's actually lowered the overall number of jobs created, because the government's fired so many. So private employment is up, but public employment is down. Futures are now lower. Dow futures was at 15.6, about 30 odd before the announcement, so they're about 50 points weaker within the first 4 minutes of the data point release. You've got the Aussie dollar, which was at 88.90 odd, and it spiked up to as high as 89.70 within a split second of the announcement. You saw it on the screen live. The euro was at 131.80. It's jumped up to be 132.80. It clearly jumped 100. Now it's settling around 132.40. The Aussie dollar is now retreating again, because, as I said, this data is the biggest data release of every month, and thus tonight normally it's the biggest trading night of the month. Me personally, I've said in an earlier video this week that this game's getting a bit long in the tooth. Every month is the same, just like every Fed statement is the same. They can ratchet down estimates, and the market only has to beat estimates, and the market's going to go up. The market just wants to find any excuse to go up. But as I said, we're not going to be lemmings. We're going to have to look and read into the jobs report. Now, I obviously am not going to read the entire report out tonight, because, man, I drove for about 13 hours today, so I'm absolutely knackered. From the initial market reaction, if this jobs number had been above 200,000, it didn't have to be significantly above 200,000. It just had to be above 200,000, and the market was going to shoot higher. I can't say how high, but it's on a steady trend up, for all the wrong reasons anyway. But I don't want to sound like a doomsday prophet, but it's just how this has been for the past couple of years. In fact, it's been like this for 3 years. But the currencies are having a very different reaction to the data point, to the stock market reaction, because had the data point been above 200,000, or a lot higher than 200,000, then that would put the odds of Fed tapering much higher at the end of this year, could be as early as September. And so the currencies were much weaker against the US dollar. I'm talking cable, euro, Aussie, dollar yen. But now everything is strengthening against the US dollar, because tapering fears are going to be slightly alleviated. The market is still digesting the data, so things are swinging around pretty erratically. I'm not going to rant on for the next 2 hours about how things are moving, but you've just witnessed a market reaction to the biggest economic data point release of the month. It's August the 2nd now, and basically stock market futures on the S&P are basically at all-time highs. Continuing on from last night's gains, Dow futures are a little bit down, as I said. Aussie dollar 89.35 odd. It's rallied about 40 pips since the data came out. Euro is now about 132.70, about 60 now. It's moving quite a lot. So that's been an increase of about 80 pips since the data. And the pound, slightly higher, 152.30. And oil is retreating. It's a very strange market. Gold is up. Gold was down about $25 today. It's basically recovered all its losses in a split second with, as I said, fears of the Fed tapering being alleviated. So I don't have too many positions open because I tend not to trade in size when I'm away from home. This is just a personal rule. Preservation of capital is the key. You don't want to be slapped in the face whilst you're away from the screen by your positions. So I'm going to get a good night's rest. I'm going to let the market play out, and I'll let you know tomorrow how things have gone tonight. Have a good night, folks, and happy trading.